Welcome to the Twomey Stock Market Report. Today is Sunday, June 26, 2022. Fabulous day this summer. There's a lot to cover. Some of this stuff I'm going to reiterate from the last couple of segments because it's very important for our investment policy. But just to review, the Twomey investment process, really we look at the overall trend of the market the last 6 months to a year to get a feel for where the direction is going, because as you can tell, the market has bounces up and down, and we become reactive traders. So we're trying to get a big picture, and that could change at any time. And then we look at all the macroeconomics, what's happening in the what's the Fed doing, what's the unemployment, basically is there a war going on? Is there, those are kind of the things that cross into the environmental factors. The macroeconomics is just the health of the U.S. stock market. Our companies putting out alerts that they're going to reduce their earnings, or is earnings up? Are there buybacks of stock? Are there companies doing mergers and acquisitions? Are there a lot of new companies going public? Is the investment sentiment with the macroeconomics of the country following suit on the stock market? Then we look at the environmental factors, and that's where like the war in Ukraine, the Fed raising interest rates, a cross between the macro and environmental. But now that the Fed has come out and they said, hey, we're committed to raising rates until we fight inflation. Inflation rears its ugly head. It's up at 8.5%. It ticks up and down. It doesn't seem to be growing rapidly, which is a good thing, but it's also not abating, which is a bad thing. Then you have all the types of things as far as the war on fossil fuel by the current, U.S. sentiment as worldwide, and now you have a little bit of a backtrack because of Ukraine. The countries like Germany and et cetera were heavily dependent on the oil and gas from Russia, 40 to 50%. They use wind and solar and everything else for the backup. It's not enough to cover that gap if they stop importing those oils. Now they're starting to burn coal now again over there. The people are, across the world are not decommissioning the nuclear plants. So there's a lot of that going on, how that has affected the inflationary cycles that we're in right now. And then the more shorter term, announcements like a few weeks ago, Target came out with negative earnings, and they're saying the consumer sentiment was, low, et cetera. The higher cost of fuel, the airlines are charging more. People are starting to change their vacation plans now. All that's kind of like the environmental factors. And some of them can become day to day. And then we look at our guardrails. And we're going to go over a little bit of deep dive again today. And specifically, I talked a little bit about, we knew we were coming into a bounce. Bounce certainly was a good one, and it may continue. And we were thinking about, going on my proverbial mouse hunt and trading the 120. I'll show you where we should have got in, but we did not. We chose not to. And this is the impact of this bear market rally. It's pretty good. So there's the fear of missing out right now. That's where we're all feeling that. And we'll also go over that. So this is a little bit foggy table, but the short of it, our position in Verizon was up, low 50s, and then, it had a big sell-off Friday, but it's still up 2.9%. That's our 1/3 remaining. It's a divisional play, and we can look at that real quick on our daily stock chart. That daily stock chart, we're looking at our inflection point is just nearing. In other words, we've got the all-in signal came where we got confirmation of that, and then all of a sudden, and I was going to say buy more, and then Friday we got this big downdraft. I haven't figured out why yet, but it is being repelled by the 200 EMA. We've talked about that, whereas earlier in our segments we say, hey, when stocks are dropping, the 200 EMA, Tesla and UNH and all these other, it's a good bounce. Some of them just blew right through it, others bounced. So here's a good example of the reverse. It's hitting that 200 and bouncing back. Even though our inflection point, the 10 crosses over the 15, or if you're using 9 or 14, which is a little bit quicker cycle for these exponential moving averages, we have the all-in signal. Okay, I have not, but we may add. And today is 6/26/22. We may, so I've got an eye on that, but that is the reason why I didn't say add to that. What else? Okay, TBT, we got stopped out our second third and our first third, the gains of 4.5, 3.5%. That's the short of the 20-year Treasury. The inverse of the 20-year Treasury, as yields go up, as interest rates go up, the yields go up, and therefore TLT, which is the bonds value of that fund, comes down, and this goes up. The TBT is 2 times 200% increase decrease per day, and the TBF is the 1-to-1 version. You can play. I play both, but you can play one or the other. And let's see, that has dropped. And I'm going to take a quick look at it. It hasn't quite hit our inflection point, TBT. And here's the daily chart again. The 10 is above the 15, or 9 above the 14. I'm using a 9 above the 14. Closed near the 15, which is 27.15, and the close was 27.22. So what I'm looking here is that this may abate. It did hit the Twomey track line and then close below it. So I want to wait before we start adding, but typically, and we'll go to our stock trading table after this. I'll give you some recommendations on how to handle. So we're still in it. This is the whole idea of the 1/3, 1/3 philosophy, right? In and out, if you will. The 1/3, 1/3. What are we doing here? We hold the last third until this 10 crosses below the 15, and we get confirmation of that. We do sell the first third if it breaks below the 10 EMA or 9 EMA, whichever one you're using, and then the next third when it closes below, but we don't get out until we get that inflection point. So what does that do? If the trend is a long trend, it helps preserve some profits. And since this is a 200 timer, it moves fast. We walk away with some short-term profits. Nobody likes short-term profits because of the capital gains, et cetera. But this market is very volatile. The trend, we know where it is, but right now we're struggling to get a long run one way or the other. But that said, we may get this bounce may go pretty far. All right, so we're going to go TBF, similar story there. And then, of course, you see the different gains because it's not 2 times. PSQ, we got stopped out our second third Friday, and on that large updraft. And we are now up 3% on our remaining 1/3, but we gained 7.2, 7.9, and 6.4% on our investment there in a short period of time. So, we got in at 6.7, and here it is 6.26, and we're walking away with a pretty good profit. Let's see. So I got to look at PSQ real quick, and I don't want to spend a lot of time here because my trading table goes a little bit deeper dive. Whoops, PSQ. Let's see, PSQ. And, so I'm going to be revisiting this, so I'm just going to be real quick. You can see how the inflection point has not taken place, and we're holding our last third, and there's quite a bit of downdraft and some good selling volume there. Dog, the inverse of the diamonds, and that was PSQ is the inverse of the Nasdaq. Dog is the inverse of the diamonds or the Dow, and we're up 3.5% there, and we got stopped out on our second third also on Friday, so we made gains of 6.4 and 4.6, and we got in at 6.7. So we'll take those. The short of the SPY, same story there, stopped out the second third. We're holding a third for our inflection point, 4.3%. That is based on Friday's close, and we made 8% and 6% on our other thirds. Let's see. RWM, we got into that late. We were still holding 1/3. We got stopped out and pretty flat on that, on a neutral trade there. SJB for risky traders only. Why? Because this is the inverse of junk bonds, junk corporate bonds. I call them junk bonds, corporate high yield bonds. You have to, corporations who struggle with a balance sheet issue have or debt issue, they can't raise money through seller bonds unless they put a rate that's way high, that are higher than, and it attracts risky investors. All good and done, but there's the inverse of that, and that's the HYG. The inverse of that is SJB. Anyways, the SJB is, if those corporate bonds struggle, those companies struggle, this SJB will rise quite handsomely. It's a good trade, but it's very risky because it's low volume. Low volume we've seen in our other low volume stocks. You get massive, swift movements because it doesn't take much for somebody to dump a lot of their position. It's a kind of a tradable thing when there's low volume like that. Hedge funds can really manipulate. I don't mean they're manipulating on purpose, but they really have control because they can have a big block and make shorter percent gain and get out, or they've got to get out to sell to raise capital for other losses. Either that. Anyways, we said add 9.55. It opened up Friday at 9.45, so 49 or something like that. So I added in at 19.45, and we're off a half a point there. The DBC, we said sell the last third. We may come back to that. That's our kind of commodity and it's a really good, been steady Eddie. And we got 4.6 and 5.6% gains on that all within a month. So not a bad, less than a month. So not bad at all. I'm going to go look at it real quick, see where it ended up. I haven't looked at it this weekend. And it's kind of rebounded a little bit, had a big sell-off. The inflection point's down. So this is one we're going to wait until the reflection point hits. The relative strength index 37.8. Did the 120 get any headway here? There's still a big gap in the 120. So we got to wait for this before we get back into it. The MACD is still negative territory in the 120. So there you go. That's our trading. Now let's go into our stock buy alert update. Sold the last 1/3 of DBC, so we'll be taking that out of our position chart. Here's the deal. We want to add to our short positions on bounces. Certainly got a big bounce on Friday. I might have added a little bit. I'd have to go back and check, which would have been a good day to add. But just to give you, and we're going to go into the deeper dive here. Some of it's going to be repetitive, but I do the stock table first for those who are just interested in that. Then they can come back and listen to the rest. And by the way, make sure you hit subscribe so you get these alerts. If you don't hit subscribe, you won't get the alerts. All right. And you can email me, jim.netsearch@comcast.net, and I can also put you into our email alert. All right. So what am I? This is, I'm going to go into the chart a little bit on the daily side in the 120. Overall, our trend is down. Overall, our economics haven't changed. Overall, our energy position hasn't changed. The Fed hasn't changed. They're raising rates. They're going to continue to raise rates. The war hasn't changed over Ukraine. It's kind of stabilizing to some degree as far as news cycle. It's summertime. We're not going to, unless it's really negative news, the market's probably not going to drop a lot. Lower volumes, lower investments. A lot of people take long weekends. We've said this before, hedge funds as well as regular fund managers, they do take long weekends, and they do put it on autopilot and just go for these tradable technical indicators or news indicators. So we may bounce around here for a while, and this may rise even further. So let's start with PSQ. We'll revisit that with that dissertation. PSQ, that's the short of the Nasdaq. It definitely a good sell-off, decent volume. The MACD is crossing negative for the first time. Yeah, our inflection point has not been hit, and as far as retracement, it's 0.618, or which right kind of stop there, and it may go down to 76%. So, which is the 50 EMA. I'm targeting, I think the 50 EMA probably would be the target point for that. The relative, and the reason why I'm saying a relative straight index, what are we at? We're at 47.14. Not oversold. Oversold will be in the 30s. The QQQ version of that, we want it off this low. We've certainly come up quite a bit in a short period of time. The relative strength index is only 50. The Twomey trend track line it's nearing that. Oops, a lot of lag time on the Schwab 3Qs on my system. With that said, it's nearing the Twomey track line. There's two. There's the red and the blue. The blue has been the more recent steep, and the red was the prior track line. So you can see it bottom at the red track line. Boy, too much going on here. Sorry. Bottom track line, right? And then the upper Twomey trend track line is quite a ways up here. The blue is the inner version. So we break through that blue. It could be going up to the 50. The 50 EMA is here. Oh, come on. In the fuchsia, purple, pink, or whatever. And my thought process here with the relative strength index fairly low, we're breaking the 50% retracement. 0.168 is up at 297. And then there's the gap to fill. So there's a big gap here, and typically gaps get filled at some point in time, and that puts us at a low at 292. And if that breaks, we may have a chance to get up par up to where this flatness here. We've talked about that before. So this could be a substantial rally. Could be more to go. I'm not in a rush to add to my short positions. We've typically we want to wait when it gets, this is the nuance, and it's hard to describe nuance in a weekly report like this, but we're well below the 15 on our PSQ, well below the 10. So I would probably wait until if it hits the 50, I would add some there, The SPY is the exact same story there, and we'll take a quick look at that. Quite a bit. The relative strength index is down. It hit the Twomey track line. It's not hit the 50 yet. Chances are we'll get near the 50. So the target on the SPY, it looks like it could be hit 399 or 401, which may get us to a stop out on our last third on the SPY. But at least you got an idea of targets, right? It's the SPY kind of hit the 50% retracement, could repel from that. It's well above our inside, our tight track line and our outer track line. It's got a ways to go. It's ways from the 50 EMA, but see how the gap, it filled this gap between this drop and this drop here on a downdraft, and now we're coming up. If it gets up to the 0.618, which is 396, almost 395.7, it could fill that gap to 401. So I'm saying on the long side, what you want to watch for the SPY is if it gets to 399, 401. So it's a potential, big ride, right, from here for the long side. We got to be careful. The dog, but we already took our, profits, previous back page, we already took our profits on the third on all these short positions, and we're not going to, and we're not, even though we're paying capital gains on a short-term basis, we're still not losing our trading, and we don't want to be active traders this active, but it's the way the market is handing us this situation, and we need to honor it. The target, on the diamonds, if it goes higher than 318.9, it's probably headed up to 324. So that has always been our strongest one. And RWM is the long of the small caps, target 177, 188. Take a screenshot of this, mark up your data on your trading, whatever you do to track your trading, and those are the things to look for. Are we going to add before that? You can add safely. I've said this before. If you got say $100 and you break it up into either do $10. If the market opens down, in this case we're adding short. So if your short position is down from the previous close when it opens up, and you feel like adding $10 of your 100, and then space that over a period of time. But put your stops in, and that's chances are you're going to get stopped out if this market continues to rise. But that's kind of the risk. Right now, we're nowhere near the all-in signal like we saw on Verizon. And then it hit the 200 and it's backing off. So we're not adding just yet. We talked about the mouse hunt. I was going to go long, and we were going to use the diamonds because that's usually a more stable and more powerful. It tends to hold better in recessions. And if I was saying we may trade the 120 minute because that's a good way to handle this. And at the time we talked about it, we said, geez, the MACD hadn't changed. And what I was talking about is we were going to, once the MACD crosses positive and the stochastics gets up and around the 70s, we want to start taking a position. Well, that would have probably happened somewhere around 304, 305. We would have got in, and now it's at 315. So we would have got 10 points, and not a bad way to trade. I didn't pull the trigger on that, mostly because mouse hunts are exactly what they are. We go after big game, and sometimes we wake up and we have a whoosh of a negative 1,000 points at the open, and here we are. We've lost everything we put in there, and some people can't get out fast enough. So I did hold off, but we need to be cognizant of that this could be a way to trade these bounces, and I'm going to keep an eye on it. We'll take it one step at a time. Some of this is new to folks, so I don't want to. I'd rather preserve capital in a bear market than take a lot of risk. But we'll see what happens. You may make a decision to make a short-term trade. All right, TBT, TBF. This is an example of ad. All right, when we close above the 10 and 9 EMA, we want to start adding on days that open slower or lower than the day before. So what do I mean by that? Let's take a look at TBT. I like to use that because it has a faster inflection. We'll go to the daily TBT. This is the inverse of the 20-year Treasury. Goes up when yields go up and interest rates go up. So therefore, we'll make this real big. All right, so our inflection point, we still have the 10 above the 15 or the 9 above the 14, whichever you use. And therefore, and it hit the Twomey track line, it closed below that, but then it's now above it and closed above it. What is this telling us? Well, we stay in the trade that 1/3 as long as we don't make that inflection point. We sold the third because it closed below the 9 and it closed below the 14 EMA. We sold the second third. We preserved our profits when we got in. But we want to stay in the trade if the trend stays intact, and this helps us stay. It gives us a push in the trade. Now we have to start making the decision, do we add back in? We know the stop is going to be at our inflection point when those EMAs cross down. The 9 goes below the 14. So there is some risk here, but we know it's a defined risk. You've got a feel for how this traded since we got in back here on 6-7 or what have you, 6-2 or what have you. But with that, we added on 6-6 and 6-7. All right, so what am I saying? We closed above the 15 EMA. 27.15 is the 14 EMA, and then it closed at 27.22. So in theory, if it opens above that 15 EMA, we could start adding another third. Now, I probably would cut, if you had $100, instead of $33, I'd probably cut it down to, more like 20. If it closes above the 9, which could happen, I would start adding a full third. Okay, and then if you get, we're looking for that confirmation. We want to get that 2/3 back into the mix as long as it starts to rise. So it makes our two things happen. Is that last 1/3 that we hold for inflection point is going to be that low entry. The next two are going to be higher entries, and then our closes are going to be slightly below the 9 and slope between the 15. This becomes the nuance of being a trader versus, hey, here's my mutual fund, hold and buy for the next 6 or 8 months, hopefully, or longer. This is the stage where it becomes the wall of worry. Is it going to go up? Is it going to go down? Am I going to get stopped out, stopped in? This is a little bit of the risk that we play. We're going to nibble away and add in, or we're going to not add it because it may open up Monday and it's well below the 15. So relative strength index on this is 53. It bounced off the Twomey trend track line. 50 is not oversold, not overbought. It did get down to a low of 49. But nothing drastic, right? So let's look at TLT. And there's a lot of people calling for TLT to get in. And a lot of people I follow, that trade that kind of bond market, they're saying get in, get in, get in. I don't know. I don't see a bounce really forming. The relative strength index of the TLT, which is the inverse of TBT, is 44.6. I'm not convinced that 50 EMA is looming. They reach up to that, but we'll see. So that's my story. That gives you the philosophy of adding in when you're near and after you've lost your 1/3 and 2/3 on a stop out and the market's kind of holding and you look like you're going to want to be back in. We don't want this to run away from us either way. Therefore, we're willing to take some of these risks. All right, SJB, I said add before 19 point, around 19.5. It came in at 19.49 or 45. You probably would have added because the Friday's open. Risk trade is only, don't add a lot. If it happens to run, you got a nice position. If it drops, we're going to take, we've got a wide stop on this. We're watching the energies. Energies took a bath, and we're going to look at our sector table. But a couple of things. Energy moves real fast. The strategic reserves, 1 million barrels a day, that's going to go on for months. That's helping abate that. What this futures, the oil is a commodity. If it trades more on the futures, so the contract is probably July that we're looking at, and they certainly go up from there. What it is indicating is less demand, and that there may be some reversals in some of our philosophies out there. Maybe the tax holiday, if that goes through, people will pick up demand. But, I was reading just on I always try to keep track of, it's not the home and garden, but it's like on, all these websites, you get this, like the home, whether it's in, buying or entertaining or entertainment or, anyways, it's kind of that lifestyle is what I'm looking for, channel, right, on the web, and whether it's Yahoo or others, and they really give good examples of what people are doing. And, one family, they live in Alaska. She said, we booked our trip to Hawaii. We have a lot of darkness in Hawaii, so we get depressed. We just want to bring the kids. COVID, they missed their graduation or prom, or whatever. And she goes, we really want to reward the kids. But now she's like, I even though I pre-bought the tickets, everything's so expensive over there. And I could say this because we're going there for, 2-3 weeks, leaving the 4th of July. So, I'm looking at things that we do, and I'm, first of all, Hawaii is ultra expensive anyway. So when you go there, it is what it is. But there's a lot of things you can do that you don't have to pay for. But when that said, she was really disappointed because she wanted to surprise her kids with some kind of nifty things. She's cutting that out, but she's still going. If people stop traveling, they stop driving, they stop taking planes, things should come down. We haven't seen airline. I do a lot of travel. I haven't seen airline rates come down yet. So energy, I don't think it's going to really drop real fast and real soon. But I'm not ready to get in. I've got a position, but I'm down quite a bit. And that I did ride the profit from earlier in the year, but it is, really taking a bath. It's indicating that the futures and the interest rates, what am I saying? There's going to be less demand. People aren't going to want it. We're not in the heating season. It doesn't mean we're going to have solar and electric panels tomorrow. It just means people are going to buy less, and that's that's why it's coming down. But the XLE, it bounced off its 200 EMA. MACD is low, the negative. The stochastic is very low and negative, but I am on the hunt to get in on this. The relative strength index is 32. It was down at 29. I am, I might have added to it Friday. I'm not saying add to it yet. We have no conviction on the 120. The 60-minute, no indicator, but our 9 and 10 are starting to flatten out. Our MACD is up. This could definitely be a mouse hunt for sure. So keep your eyes open on that. That was a long dissertation. UNG, let's look at that. Natural gas US. We certainly know the story on that. Has not hit its 200 EMA. It's broken below the 50% retracement, heading for the 0.618 where the 200 is. Stochastic starting to flat out. MACD is down. Our inflection point's way down. Maybe ready for a bounce. And that's mostly because natural gas in Russia, okay? Even though the U.S. is going to try to supply some of that, we're not fracking as much, the whole story, right? I think that's going to come back. But I'm not in the thinking or the prediction business, so let our guardrails tell us that, but that's on the watch. USO is the U.S. oil barrel, if you will, price per barrel. What's that doing? USO, nowhere near the 200, broke below the 50. Inflection point's been crossed. Everything's down. The relative strength index, though, 43, 40. It went down to 40. What does that mean? You get into the 30s, it's oversold. We're not quite there yet, but it's eclipsing that. OIH is the oil sector. OIH. Oil sector is both oil companies and the service sector, like rig and all these, and all these things servicing the oil equipment side of the business, if you will. Now here we go. It hit the 200, kind of hovered around there. Boom, came way down. This thing is just getting, it's just merciless. It is getting, this is very, hasn't even started a bounce yet. So the relative strength index, we've been at 29, 32, and it closed at 33. It's definitely in the oversold area. But and look at the MACD here is starting to make the change in the 120. This thing moves fast. So it's on the watch. I'll get an alert out. I gotta take more time and keep an close eye on this. So that's the story. That's where we are trading. We're not making any big moves yet. Did we miss this bear market rally? Yeah. Do we want to be in it? We could have used a nice mouse sound here. Our 120 does bear out. We should have probably gone that and taken that. And maybe some of you did. But it's an active trader, and you got to be watching it. You got to be all over it. And you can miss it, any day. And then, of course, then we had the 800-point swing, and you wake up, it's up 500-600 points. Do you get in? On a Friday, hard to do. But the legends of the bear market, this is worth repeating. Beginning of bear market turns, the rallies are flashy. They're generally short-lived, and then the market continues lower. They tend to grow, these rallies tend to grow and get more exciting, but they are very deceptive. The financial crisis of 2007, 2009, we had some nice rallies of 8%, 12%, 7%. Then it continued to go lows. However, once that last one took place, we had overall declines of, we had some good rallies, but we had, some really spectacular declines before we hit the bottom. Bottoms are really reached when the Fed starts saying we're going to stop raising rates and we're going to abate for a while and use economic data to tell us where to go. That's when the market kind of flattens out, and then the money starts plowing into the market, and it may come out of bonds. With bonds going up, conservative money is going to go into bonds. We already talked about that. 10-year Treasury, 3.something%, and that's coming down a little bit, but conservative money is going to say, hey, I'm going to go travel, and I'm going to put my money in safe haven, wait for the next rally. Advanced decline. You can see this is as close of Friday, definitely a big turn up. Now, remember we talked the relative strength index was low 30s. Now it's up 56, so it's climbing. It's nowhere near the overbought area, but this gives us another indicator. Our MACD down here is just crossing positive, so we're gonna get a nice bounce. It could get up to the last area of 1100 and 40 area, or maybe the 50. The 50 is really the target. It's above the 200. It's above the 50 now. The 200 is the target. Anytime it stays above the 50, I take pretty close watch, and but it's got to be there for. As we've had a lot of discussion about advanced decline. It's a good indicator, but it's hard to use it as a snapshot, right? You got to look at it over a trend. Our sector analysis table, real quick. This is sorted on the 5-day preference, if you will. Consumer discretionary, IT, healthcare, communication. Interesting, real estate's up. Consumer staples, pretty much good, consumer information. Not much on the IT is the Nasdaq rally, right? Healthcare, that's always a very defensive area. So money's going into not only some high flyers in the IT that were beaten down, but also going into the defensive nature, communication and consumer discretionary healthcare. Consumer staples also. So if you look at the bottom, energy, materials, industrials, and utilities. And if you look to the 6 month or the year to date, the only thing that was in the green was energy. It was up in the 40, now it's down 19. Materials are kind of flat. It's now it's minus 11, minus 16. So we're really seeing, anything that was high falutin, which is the energy, utilities, and materials, are getting sold off. Interesting enough, XL, remember XLU, we had a position and we really got in late. And it was very disappointing because kind of forced to sell, if you will. See how these big downdrafts. And I was like, the relative strength index was in the 20s, 24, 25. I said, I really don't want to sell, but we got to protect it. And sure enough, what did it do? It bounced off and it's had a nice run. So that is definitely headed for probably at least a 50% retracement, but it's going to probably be repelled by the blue, which is the 200 EMA. If it breaks above the 200 EMA, we may revisit that and get back in. But nothing really new in our sector. Overall, everything's down except for energy. Let's see. S&P support levels, the retracement, we set a 4% down from Friday's close, 35.26. So we really haven't come close to that. We could get down to around 11%, which is 3,200. We're nowhere near these now, and with this bounce, but it's still our target area. Okay, so we're still looking. Let's go on the weekly on that. We're still looking for a big downdraft. Okay, if it doesn't come, we certainly will reverse course. Right? And that may be a hard decision, but we'll be well stopped out before that hard decision. And that pretty much covers where we are. Bear market rallies are very intense. We want to take it one step at a time. The mouse hunt was probably the way to go on this one, and we did not take it. But, there's still room left, and there are a couple of plays, and it might be, we might use energy. I think energy may come back, but it's certainly not a place to start buying right now. Nasdaq, the same story. Bear market low table. We've been over that. So that covers this weekend's analysis. It gives you some idea for the coming week. We'll see where this bounce heads. I don't know. Any negative news, you'll get a sell-off. If it really gets into the overbought area, and it's got to probably climb up into the 60s before that happens. And go back to our target levels on these on the long side, 298 to 299 on the Nasdaq, 399, 401 in the SPY, and then the Dow could be 319 to 324. Dow could be the strongest rebound here. So keep an eye on that, and we'll probably get some alerts out, early part or mid part of next week to give you if there's things really have changed. If you need something, email me at jim.netsearch@comcast.net. You got a particular stock, I'll give you some, my take on that, some guardrails to keep in place, input on what you'd like for segments, and then or topics, and then Twitter at Twomey Stocks, the number, the number 2 ME Stocks. You can reach me there as well. Or you can start a thread there as well. Have a great weekend and enjoy this summer. It's been spectacular. Thank you for listening.